Bomba-dee-da, 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 bomba-dee-da,
Recording in progress.
So we got that
Happy
for us.
trails. Happy trails. What was that?
I don't know what that was. just came out of me. I don't know.
That's just one of those.
It was organic.
Yeah, it's real.
It's real.
It's real, just like us.
It's real. It's organic. It did come out of me, but that's a little weird.
I don't know if I'd be proud of that.
I shouldn't say that to too many people.
Proud of that, but
don't share that. Don't share that with your friends, everybody. Hey, what's going on? I'm Matt Bynum. I'm a practicing dentist here in Greenville, South Carolina. Actually, Simpsonville, South Carolina, home of the Simpsons, and been practicing for nearly 30 years. And my cohort over here,
Dr. Blaine McLaughlin. I live in Robbins, Iowa, the home of the Robin, but we are in our offices in Cedar Rapids, and practicing dentist for 29-ish.
Scary.
Soon to be 30 to celebrate.
Scary, isn't it?
Next year. It is.
Yeah, it's moving fast, huh?
Sometimes it moves fast.
Have you ever woken up and you just say to yourself, who's got your money?
Yes.
That is why.
I hope you listeners are asking yourself that. Maybe when you go to bed, maybe when you wake up.
That's part of why we've started Happy Trails podcast, because it's really quite simple. After practicing for nearly 30 years, the wealth that Blaine and I have acquired in this profession of dentistry, where the rich are made, at least that's what we were told. We should be riding off into the sunset of our careers, into retirement with plenty of money. This money that we put off into our 401ks and any type of investment should be there to kind of get us all the way through till the time we're 103. And somehow that money that we have just isn't going to quite make it that far, is it, Blaine?
No, it just didn't grow as well as we were taught in our retirement plans, in the stock market, in the diversification of individual stocks, not diversification of investments, just stocks. That's diversification. Maybe you should try different investments, everybody. How about some real estate along with your 401k? Hey, bonus.
Hey, kind of like the thing that we were just talking about. If something ain't working, maybe it's time to change something, right?
Yep. We were just talking about that.
Yep. There's plenty of things out there, plenty of things to try, plenty of things to do. And I think certainly just because it works for one person doesn't mean it's going to work for you. It doesn't mean it's going to work in your area. But you know what? I think you need to give it a try to see if it does or doesn't. You need to give it the old college try, so to speak.
Mm-hmm. That's right. We taught our kids that, hopefully, because there are a bunch of them are in college, and hopefully they're trying.
Yeah, I've got one left in college.
God, well, come on. Dental school is considered college.
Dental school, schmental school, whatever the case.
Oh, well, we had some big news on the real estate front last week. Do you know what that was, Matt?
I actually do. The Fed got involved. And what happened?
The interest rates were dropped.
They were thinking it was going to be a quarter. They were thinking a quarter. But guess what, people? It dropped a half a point. That's a lot.
Mm-hmm. That's substantial. I mean,
that's substantial considering where we're at.
Step in the right direction.
So now the current rate is 6.
Well, it's 4.75 to 5 is the actual the rate, so that they base it on, and
right. 6
so
would be more of the loan, because somebody's got to make some money. So
right.
That's the way it normally works, and I understand that. So do you people out there. Everybody's got to make some money.
Yeah.
Makes sense.
So I mean, this has some pretty big implications.
Right.
Not just because of this half a point cut, but because of what's coming in the future, right? So when they started raising interest rates, one thing I noticed is that we're reading these things. They're like, oh, it's gonna be terrible, and we're gonna have all sorts of problems. And everybody's like blood in the street, right? There's going to be blood in the street, and all these deals are going to go down. And 6 months later, it was like, well, I haven't seen many. And 9 months later, too many are coming. There's a few. A year later, there's a few. So it's not like this rate cut is changing. In a month, we're not going to, the multifamily real estate world is not going to be freaking upside down and from where it is today.
Yeah, the blood in the streets is minimal.
It's a step in the right direction for a lot of things, and for some things maybe not. But it's both good and bad, as is everything out there. So we'll talk a little bit about the good and the bad, and what it means.
Yeah, I think, and the projections are they're talking 1 to 2 more. They're saying it's probably the rates are going to continue to drop through the end of the year, but the Fed's going to get involved. They're saying
they got
two more
they
times.
Got one more meeting in November.
Right, but they're saying they may come out and do 2 times before the end of the year. That's what they're talking about. So if they do, that's going to be pretty healthy. Even if it drops a quarter of a point each time, but they can also get together and say they're not doing anything.
Yeah,
we're going to stay where we're at. But either way, the trend is obviously moving down. They're talking about beginning first quarter of next year, maybe coming down by that point at least another half a point as well. So things are moving in the right direction. Like Blaine said, the blood on the street maybe is not as flowing of a river as what everybody was afraid of after the 2023 everybody made hay kind of deal in multifamily. So the projection was, given the rates and as they were beginning to increase, was simply the fact that multifamily real estate is dead as we know it, like dead in the water. No longer is this going to be a viable option for investment. And I don't know. We just haven't found that. What we did find, though, is there's not as many deals, like Blaine said, coming through. They're starting to loosen up a little bit. And I think we talked about this in our last cast and the cast before, they're loosening up because people are having to come due on their notes. So the notes are coming due. They've either got to refi or they've got to sell the properties. So yes, maybe they're going to be selling properties. Maybe they're going to be selling those at a discounted rate because they need to get out. Yeah. So hopefully in those situations, the investors, because that's really when we get involved for our investors. I want my investors paid before I get paid. I think you feel the same way. I want my investors to at least come out unscathed. When I was explaining to people in the deals that I had my investors get involved, the explanation was very simple. If you put your money in and you didn't lose any money, it would just be like being in the stock market. Doing exactly what you've been doing for your past 20 years, except you wouldn't be losing money. You would just stay the same. So at the very minimum, you stay the same. It would have to be a catastrophic failure for you to lose money that you invested, provided people are handling the sale and the progression of the complex in the right manner. Right, Blaine? Yeah,
true.
So
very true. And we're back to what does this mean when the Feds drop the rate? Well, the big things are, again, it's gonna lag because multifamily typically lags. And so, we'll see changes a little bit in 6 months, 9 months, maybe a year. They'll continue to drop prices, but the effect of this drop isn't going to hit right away, right? And that's just the way that the thing works. But typically when you have money is cheaper, it's easier to get loans, right? So maybe we'll see a few more deals pop up, maybe some semi-distressed deals, not totally distressed, but some that are like, you know what, money's a little bit cheaper for somebody to buy this from me, and then I can get out and do something different. And people are like, it's a little bit easier to buy something now because, prices have gone down anywhere from, I've heard 10 to 30%. That's a large, kind of a large range, but I suppose it depends who you're talking to. 10 to 30% in real estate property values. And and that's not going to jump up right away, right? But as interest rates come down, you're going to find the cap rates of these places are going to compress a little bit, and that's going to increase the value. So, again, over the next year, I think is again going to be a pretty sweet spot. And we keep talking about how it's kind of nice, but money's a little bit cheaper over the next year.
Yeah.
And, I suppose you're probably going to start seeing some variable interest rate deals coming out.
Yeah.
Because now that the Feds have cut rates, if you need a rate cap for your current loan that's variable, I imagine the prices of those are going to drop like a rock, because those are to prevent the interest rate on your loan from going sky high.
Yeah.
Well, if the Feds are dropping things, then it's like, oh, well, where's the risk? Chances of things going up are slim to almost none over the next year or two.
Yeah.
So those are going to be less expensive, which increases the value of properties, because you don't have to pay those. It's just a lot of repercussions. And like I said, I think the cap rates are going to follow, but I don't think they'll change much over the next year. So you get some better terms on your money, and things are still going to be on sale.
Yeah. And
Sounds like
I think,
a good deal to me.
yeah, no, absolutely, dude. I think you're absolutely right. I think we're trending in the right direction. And one of the most important things that you just said earlier was there's a lag. There's always a lag period between what's happening in the economy and in multifamily real estate. Well, I guess almost in all real estate. It doesn't just happen like this, If the Feds drop the rate, so does everything else. It doesn't happen like that. So there's a lag period that comes into it. That lag period could be, anywhere from 3 months to 6 months, maybe even longer, because it takes a while for things to adjust around it. Now, that said, there's always going to be times in front of you that you're going to have to face that are maybe not going to be fit into the perfect mold. It's not a round peg going into a round hole. It's a square peg that you're trying to fit into just
Triangle.
slightly askewed round, bigger hole where if you push it just right, maybe it goes through. But, there's things that you have to evaluate and look at for yourselves when it comes to that, because of that very reason. And if you can catch the trend, then guess what? You end up on the other side of it where you're sitting pretty sweet. I, for one, like Blaine said, think this coming year is going to be instrumental leading into the following year, which is going to be great for a lot of the people that jumped into these deals like Blaine and I did in 2022, 2023. We think this is the time that those are going to be coming to fruition, and right at the point where they're either going to sell at a high time or refi and get out. I think it's going to be fantastic. And I hope that the trend is correct, and I hope that we're correct. Right. That said, you just can't predict the future.
I hope people know that by now.
Right.
With all the crap that happened with COVID, and then the inflation going nuts. It's just crazy.
Speaking of inflation, I know we talked last time about the election, and we try not to get too political, but the talk of ingesting, so many more $1 trillion into our economy, we're going to see that creating a little bit of an issue down the road for us. And I am a little bit concerned with that, not in relation to our investments, because of that lag period, but very simply because, it's going to decrease the value of the dollar. It's going to decrease the value of our spend, which is problematic, because then what? Our properties that are supposed to be valued at X aren't going to be X anymore. So because everybody just throwing around dollar bills because they just hand them out like candy. So that's a concern for me.
Yeah,
that's a concern for me.
Well, and that's all this interest rate thing is all about, basically, is to make sure the economy does what it's supposed to, according to the Feds, who, I don't know, they don't run many things good, but they think they know what's best for our economy. And their whole goal is 2% inflation. They said that is ideal. Okay, well, that's cool. And it's almost down there now, as down from almost double digits, or depending on, it was double digits some places for sure. But so they're like, okay, the economy's starting to waver a little bit, and job growth, and companies aren't hiring as much, and that kind of stuff. And so they're like, oh, okay, so if we keep interest rates high, that's going to put the economy, and it's going to crash, right? So they're starting to drop these interest rates a little bit, which is supposed to, again, make it easier to buy a house, to afford a house. It makes it more affordable for us to live if we're borrowing money to do it and invest, of course. And so they're, that's why that's a lot of what goes into the interest rates and why they're doing what they're doing. So now that the inflation is down, they're like, okay, we got the inflation almost where we want it, and so let's see if we can't keep the a recession or depression from coming by lowering these. And so, we'll see how the job rates and all the job growth and stuff is over the next couple months. And if we see it trending in the wrong direction, I think we might get another half point this year. And if it kind of levels out a little bit over the next few months, then maybe we don't get a cut or we get a quarter.
I'll tell you what, if we got a half a point cut by the end of the year, that's sweet. That's sweet. That you're definitely looking up at that stage and really almost a little breathing room. And that's a good thing. That's a very good thing. I think one of the things that we never talked about before, Blaine, is when we
have talked about it before. I don't even know what you're going to say, but I'm sure we have.
How rude is he? He doesn't even know what the hell I'm going to say. We were going to talk about how you always buy small underwear. And
never talked about that. You're right.
I told you, but you think you got the answers. That's all right. Blaine somehow thinks that cutting the circulation off to his private parts is helpful.
Inner legs.
I don't know. His legs, and they look bulgy. like he's been working out. I don't know. Anyway.
Squats.
Anyways,
okay.
Muscle up. Anyway, but what I was going to say was when the economy is kind of taking a tank and the rates are going up, you'll notice that one of the trends that we were seeing, and we were talking about this in 2023, was simply all these new build apartments going up everywhere.
Oh, sure.
Like you look at the area like Greenville. I've been looking for a market in here to find anything that's going to be a value add, and I can't find it because everything is new build. It is every time I turn around the corner, brand new apartment complex going up. Well, here's the thing. As those things started to go up and the rates started to climb, guess what? The builders can't handle that because they need to have money to build these things. So everything kind of slows down a little bit.
Mm-hmm.
People have to rent these apartments. Now, what we're talking about is really affordable housing. Apartments are meant to be affordable housing, yet when you build a brand new apartment, it's not always affordable housing. Sometimes it's luxury living.
Most of those are pretty luxury.
Right. So you don't
style,
you don't have the home and the yard and the HOA and all that, but you have an apartment complex pretty nice. Maybe it's hell, I don't know. I've seen apartments 2,000 square feet that multi-bedroom, and they look like multi-level. They're looking at a skyline. I'm like, damn, that's gorgeous. But you look at something like that, and as opposed to something where you're talking about an apartment complex that was built in the 70s or the 80s that you can go in and do some value add on. Well, what are those people doing? If they can't rent those apartments, we still need affordable housing. That's the whole thing. That's why this value add concept of syndication in these apartment complexes that have been around for a while is really sustainable in any economy, because no matter what, if you're making money, there's still people that don't have that kind of money. And if we're not making money in the economy, there's a lot of people that don't have the money to buy those luxury apartments. So they have to dummy down and go to these other apartment complexes. This is why this is such a sustainable market for your investment.
Yeah. Well, and you look like all the new ones are usually luxury or very nice, right? So somebody might ask, well, why don't they build a low end apartment complex, right? And just put really low end appliances in there, and use carpet or whatever. Well, the problem with that is that it's still new, and it's much more affordable to go in and buy an existing structure and revamp it and make it as nice as something that's low end new. And it's just not feasible and affordable to do that. But so that's why, again, you said all excuse me, all economies and the what we're doing with the value add is going to be great, and it's sustainable, and that's why we do it.
Right. Well, you also mentioned that the complexes are kind of coming down in expense. Some people are selling deals at 30% below value. one of the last investments I got in with Granite Towers, Cooks Creek, 30% decrease off the value of the apartment complex is what they purchased it for. I mean, unbelievable terms. I don't know. You look at a deal like that, it's really hard to lose in that situation. So, and right now, occupancy in that complex is trending. It's moving up. We're sitting above 90%, which is great. I think it's sitting in 91, moving up in 92. We're starting to rehab some units. So that's really a cool investment to see get off the ground because it's an older complex that's surrounded by other complexes that are all occupancy above 93, 94, 95%. So it's going to be really interesting to see what happens in Cooks Creek. I think it's going to take off. It's going to do very well, even considering that it's a lower end affordable housing. I think that's beneficial to the concept. So
yeah. One of the other things I wanted to mention about the interest rate drop in what it does, again, it's not just the fact that it's dropped a half a point, it's the signal it puts out to the rest of the world. And that's going to stimulate a lot of big money coming in. A lot of the big companies, are going to start. It's as we said, it's headed in the right direction, right? So all these companies are going to start bringing up, millions and billions of dollars, reinvesting. They've been sitting. A lot of them have been sitting on the sidelines for a year or year and a half, and I think we mentioned a couple podcasts ago how they're starting to creep back into it. But now with this investment or this interest rate drop, that's gonna stimulate a lot of big money and corporate money and stuff to come back in.
Yeah. I mentioned previously that I've been venturing off and doing a little bit of land development and things like that. That's really interesting because the players that are building the homes are getting back involved now. They're asking if they're actually coming to the table saying, "Hey, I found this piece of property. I need to find somebody to develop this property so we can put some homes on it." So they're starting to come out of the woodworks again because the rates are decreasing.
Yeah,
so
it's easier to build, right?
Yep, those guys have been standing on the sidelines. And what's funny about these big groups like that is they're almost required to build homes, so many homes per year. So they've kind of hit a stagnant wall with the last year and a half. And now the floodgates are going to start to slowly creep open. Man, those guys are going to be pumping money in to build stuff like crazy. So again, but that's new build stuff. New build stuff. So when's the best time to get into investment, Blaine?
Probably
yesterday, because that's what's available to you right now. Is there's plenty of stuff out there that you can get started on right now. This is not the time, with, like Blaine said, the blood on the streets. It's not the time to be scared about what's going on. And we've said this all along. It's time to really get involved and get in the game. It doesn't mean you have to buy your own complex. It means evaluate your education for this process. Learn what you need to learn. So when the gates do finally open, you're poised and ready to make decisions on your behalf for your future, not somebody else doing it just by flipping a coin. I think we've all seen that before, and we've talked about it ad nauseum, just how somebody else is controlling your money. They're not taking care of your money. They're just, they're like, "Hey, these people sent me on vacation last week to go in the Vanguard fund. So you know what? I'm going to push everybody into my Vanguard fund."
Vanguard fund.
I mean, it's ridiculous how, I don't know. It's really like a physician that's pushing medication,
I was going to say,
it's pushing Cialis instead of Viagra because the Cialis rep gave him, a whole bunch of stuff and said, "Hey, you're almost here. We're going to take you to Mexico for 2 weeks." You know what I'm saying? There's incentive for stuff like this. It's no different in the world. It exists in every market that there is. So don't, you can't be ashamed of it, but you got to know the game. So,
yeah, that occurs a lot in medicine, unfortunately.
Yeah. I think less where now.
They get I think it's going to less, and you can always get into the government and how they're influenced. The lawmakers are influenced, creating laws with big money.
Big.
And I saw, and this is kind of funny. And I don't, not to pick on people, but hey, we're playfully serious, so we can do a little bit of that. But it said,
or are we seriously playful? Which one is it?
Well, it's for you guys.
That's up to you.
But I saw this thing on Twitter. It said, "Congratulations, Pfizer! 140 years of making medication and not curing a single disease."
That's
I'm
sad.
like, oh my God,
That
that
is
might be
sad.
true. I mean, there's just, they always got something to help with the symptoms or help, but what, you don't get much of a cure, do you?
That's
I don't
funny.
know.
That's
Even that
funny.
great COVID vaccine cure.
Yeah.
Yeah, that didn't work out so well. But anyway,
That's we're
uh,
gonna stay away from that one. That's politics, Blaine.
yeah.
We're not talking
Well,
politics here.
no, we're talking multifamily
We're
real
talking
estate
multifamily and investing
investing.
and money and
So
everything else.
right on.
So the
Shoot.
word on the street is, hey, screw it. Let's get in the game. Then what's the
On
next
our
step for somebody? The next stage, the next place for somebody to get educated. So somebody out there, our listeners, they're beginners, right? Let's be honest. They're
sure,
they're
sure.
they're listening to us mainly because we're good guys and they see some things we're doing. They're like, I like what these guys are saying. So we're teaching the very basics of some of the stuff that we're learning. But outside of that, you can go to the Sumrock, right? You can go to
No, sure,
Brad.
sure.
You can go to Brad. You can go
Yeah.
to. There's plenty of other people out there as
There's
well.
all
My
sorts of books, all
yes.
sorts of podcasts. I mean,
The point
YouTube
is,
videos.
you've got to get in the game and educate yourself. Now is the time, people. But I think what else do you want to say, Blaine? Because I'm gonna skip to something here in a minute. I
No,
want to
well,
skip to
no, I
what we
mean,
were talking about.
I'm headed actually on a couple of days. I'm headed to a Sunrock event, and another physician event down in Dallas. They kind of
Yes.
overlap, so I'm going to actually both of them. It's going to be pretty amazing because I'm going to be two places at once. So, we'll see how that works.
Where am I? I can't go to that one, but where am I? I can't remember.
I don't know. You're in your house right now.
Where? No, where? When is that? What did I have? I got a
I
conflict,
don't. I
dang it.
remember. I remember trying
Because
to
I
talk
want her
to
to
you,
go.
going, "Hey," and you're like, "Nah, well, you got to do something with dental and anesthetic or something." Was that it? I can't remember what you're doing.
When are you there? The 11th?
I no, I leave Thursday, like in 3 days.
What?
Yeah, I got a free ticket if you want to go.
It's the
Or if any
27th?
listeners, yeah. Although most of the listeners, this probably won't be put out until after we get back. So,
Yeah.
uh, anyway, maybe I'll get some video. Hopefully, I'll get some videos of some people down there. Like I said, one of the conferences has a bunch of physicians, and we're trying to. I'm trying to. One of my goals when I had the 3%, when I realized I got 3% on my 401k in my retirement was going to be put off because of that unless I did something different. That's what I'm trying to help people with,
Yeah.
and I don't want them to have to go through that. So this is going to be interesting. With the one is, like I said, it's, I don't know, there's a couple thousand physicians there, I think. So, and it's all about real estate and what physicians can do other than working their current job in a hospital or a clinic to make money. So it'll be kind of fun. It'll be kind of fun. Getting a
I'm
little
really
different take.
interested to hear how that goes because, I from another perspective and another ecosystem,
Yeah, that'd be
it's going to
cool.
be interesting to hear what people are saying. But, one of the things I wanted to touch on was what we were talking about before we got on the cast today. And it applies to all areas. This is about education. This is about investing. This is about running a property. This is about running a dental office. And really, really, it's kind of simple. The definition of insanity is doing the same thing over and over and over and expecting you to have a different result.
Different result.
So if we sit here and we watch our retirement money like we have, and it's just been hitting the crapper, and nobody's really making any money. I mean, I was trying to think the the boys had some money invested for the last so many years. And I was like, wow, congratulations, guys. You made like $130 or something. It was something stupid. And I'm laughing because I'm like, really? This is what
Man,
it is. This is where we're at. And then you compound that to somebody like you and I, Blaine, that we've raised a family and we're getting to retirement. And hey, we're supposed to retire in this where we don't have to work anymore. And we're going to have this money that we can live on. Well, you know what? That's why the Walmart greeter is 87 years old, because he still needs money. It's
mm-hmm.
not because he likes people. He or she likes people. It's because they
I
don't
don't go
have.
to Walmart a lot, but most Walmart greeters are. Some of them aren't the friendliest, right?
They're not. But they
There's a
don't have
couple.
money.
There's a couple that are. They're usually drunk though.
But they don't have money, and that's the
No, I
thing. And
know.
so
I know.
here we
See,
are. we're
checking
trying to
people out. And
we continue to do the same thing over and over and over, and we're expecting something else to happen, and nothing happens that way. So what do you have to do when that situation comes? I know that in my dental practice and the way that I used to teach it and the way that I do it now in my practice, and again, Blaine will tell you this, the hardest thing to do is teach the people closest to you. You can,
Mhm.
that's why we have coaches, that's why we have teachers, that because you try to teach your kids something, they look at you like, okay, dad, whatever. And I used to laugh because I have friends that they'd say the same thing I would say to my kids when they were younger, and they look at me like I'm speaking a foreign language.
Hey, Dad, guess what so and so taught me?
Yes.
And you're like, are you freaking
He's
kidding me?
he's so
I said
awesome.
that for the last 5
Yes,
years.
he's so awesome. Listen to what he said, Dad. So finally I just started playing the game, and I was like, I said, man, Blaine is a really smart dude. That is awesome. And because you have to, but it's no different in your team. Same thing. If
Yeah.
when numbers are down, or and the number of new patients are down, and morale is down, you've got to change something. You can't just continue to do the same thing, think it's going to happen. So we were talking about this before the cast in relation to properties. So let's just say these properties, we know the economy's hit the shitter. We know that, it hasn't been great. We know that now the interest rates are starting to come down, and that's great, but they weren't for a while. So everybody just sat there with their twiddling their thumbs going, oh, woe's me. I don't think so. I think we're involved in a few properties where they started changing things, mixing
Hmm.
it up,
It's not working.
bringing in new people. If something's not working, maybe somebody else has something better. Maybe somebody else has something, a way to communicate differently with the management team that's going to motivate them a little differently. Maybe there's somebody that's going to have a different idea of taking the apartment complex a little different direction, and see if we can increase the enrollment, and decrease vacancy. I There's so many things that are out there, but you have to be willing to think differently. And this is where a lot of people get caught, right, Blaine?
Yeah. Oh, yeah. And that's one of the things that you have taught me for years. And luckily, I wasn't one of your kids, so I kind of listened to you. Um, and the thing I said is that if you have to do something, it sucks, right? But if you want to, I mean, my daughter, well, kids are a great example of everything, but she's like something about, in school she's had to read books, and she goes, I never read a freaking book in high school because da, da, da. And now she's reading books because she doesn't have to. And she goes, you know, they're fictional books or whatever, or she, something about the Menendez brothers who, stuff like that. But anyway, she's like, I'm reading, and they're really cool. It's fun. It's fun. It's interesting. And I'm like, and I'm learning stuff, and I'm like, exactly. But it's the fact is she doesn't have to do it. So, when we treat our, I don't know, whether it's family or family friends or office colleagues, and I'm like, hey, let's work on this together, and let's do it. And again, it's motivating them to work for you and themselves instead
Yes.
of having to do something when they get pissed.
Yep.
It's like, hey, I see where the outcome can go, and maybe I can be part of this positive outcome.
Yep.
And that's a whole different mindset, even though you're doing the same freaking thing.
Yep. And we're involved in a property that they were having some difficulty, and they made a change in asset management, and the numbers are starting to take a turn. That doesn't mean the person that was handling asset management before just sucks. It means that whatever they were trying at that particular time, maybe it was the tonality of how they were dealing with people. Maybe it was the idea wasn't fresh enough. Maybe
Yeah,
somebody had a
for the
fresher
area.
idea. Who knows? But the point is, if you're doing something and it involves more than just you, then you've got a team working together. And that team is expected to expand and grow. And the only way to do that is you got to have an open mind first to be able to see there's an alternative. You got to be willing to try the alternative and see what the outcome's going to be. But all I know is the definition of insanity when it applies to any of your investments, any of your work life, even your home life. How foolish can we be? Let's just think that we're going to change the world by continuing to hammer, hammer, hammer. Doesn't happen that way. Ask me how I know. I had to learn the hard way sometimes, in my earlier days. So I always thought that I
Mhm.
could I could beat the wall down, but somewhere down the road, you can't knock down every single wall, even if you try. But you got to approach things differently. And I think that's a learned lesson for people that are out there that are thinking, hey, should I get into real estate? Should I not? Should I get into multifamily? Should I not? What do you got to lose, people? It's time to get off the fence and jump into it. That's what I'm saying is educate yourself. That doesn't mean take all your money and throw it in investment. That means start educating yourself. Go back to the beginning. Listen to Happy Trails from the very beginning. Listen to how we started this podcast by talking about what we were going to do. And then we talked about terms. We mentioned terminology, and we went through that on 2 different occasions, I think, over the course of the year, because we got new listeners coming in. Terminology, understand what these words are that we're talking about. Understand when you get around other people in a networking environment and they're mentioning things, you got to understand what it is they're talking about. So start there. Start educating yourself on what interest rates are. What is a cap rate? Why does the cap rate go up and down? Why does, like we talked about, why does the interest rate falling have an effect on the apartment complex in general and its success and occupancy and vacancy and all those different things? Learn that stuff. This is what we're trying to impart. Any bit of wisdom that we collect, we try to give it to somebody else because we're trying to help you along the way.
Exactly. And I mean, even the interest rates falling don't really affect the rates of multifamily investments. It's more the 10-year treasury. So again,
Yes.
that's one of the things that, we got into this and it's like, what do you mean? They said
Yeah.
the interest rates are here. What doesn't that affect? No.
Yeah.
It's
Yeah.
it's a guideline. It's kind of a guide in a general direction, but the 10-year treasury is what really affects the rates that are given to multifamily investors.
I think the
From banks
guideline
and
is more, the guideline's more fear, isn't it? Like it's those interest rates that creates fear. It's kind
oh
of like,
yeah,
oh my gosh. But yeah, you're right. That's the true indicator is not that.
So that's just kind of an example of learning terms and learning what's going on around and what's out there. And of course, we didn't know this 3 years ago when we started, but hey, we're still moving in the right direction. Like
That's
I said,
right.
I'm going to another conference, so I'll learn some more, meet some more good people. Maybe I'll get some interviews. We can
We're
throw
excited
in
to
on
hear
a
about it.
podcast. And
I'm in Miami I was going to a conference in Miami. That's why I couldn't make it.
yeah, I knew you were doing something.
I couldn't remember. I've been on the
That's
road for
okay.
like so many weeks. I don't know where the hell I'm going and what I'm doing.
I know you have been, man. Dang,
I just
crazy.
I'm going to a conference in November in New York. I got pumped today because I'm gonna lay over the Sunday instead of coming home on Sunday. Going to a Giants Commanders game.
No, are you?
In November. Yeah, it'd be
Nice.
cool. Now I don't know.
Wait,
November in New York could be snow. Who
that could be
knows?
badass.
It could
You
be
better,
cold.
yeah, you better keep growing that beard. Keep your
Yeah,
face warm.
I just trimmed it up a little, but you know what? Hey, I might have to get a little bushier and let it go. Maybe Santa Claus will come back. Who knows? Who knows? Who knows?
All right, guys. Thank you.
Hey, thanks for
joining
listening.
us. It was a good one.
Yep.
Good update.
Plug in.
And let us know how we can help. Like if you're like, these guys keep talking about deals. I need one.
Yeah.
I'm ready. Give us a call. Send us an email. Whatever.
You got the info. Blaine will put it down below. Share the cast with your friends. We're trying to increase subscribership. It is the fastest growing podcast for multifamily real estate out there. I'm very positive.
Pretty sure.
Pretty sure. Hey, until next time, guys. Happy trails.
Peace out.